Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is Monday, April the 20th, 2020. I have the very distinct honor and great pleasure of welcoming to the show a brand new guest. Is a gentleman whose work I've just started following over the course of the past few months. Really respect what he's doing. He has some ideas about the economy and about precious metals that may or may not align perfectly with what I believe, and that's okay, because I like contrarian ideas. I think that he has a really super background in what he's doing, and I'm really very honored to have him on the show today. His name is Dan Kurz. Dan, welcome to the Daily Coin.
Thank you, Rory, for the invitation. It's a pleasure to be here.
Well, I'm certainly glad that you're here. With everything that's going on in our world right now, it's great to bring on somebody new that looks at things a little bit differently. And if you would, is it Dan or Daniel? Which one you prefer?
Dan.
Dan, if you would give people a brief intro into your background and what brought you here.
Okay, thanks, Rory. I've been in the investment business for nearly 40 years. I'm a CFA. I have worked extensively in the Swiss private banking world. My last corporate protocol was as a thematic strategist in Credit Suisse CIO office. I lost that position as a result of restructuring. The thematic approach was taken out because it didn't jive with the others. In other words, it was taking away influence from people in bonds and stocks and Forex or what have you. So they couldn't get it to work in the mix. And after that, I've kind of gone onto my own and have tried to gain altitude in the alt media space. And here we are.
Well, I'm glad that you're here. And like I said, I've been following your work for just a short period of time. But I really like what I'm seeing. I think that what you're doing is really good and worth people's time. And you can see his website right there. You can find his work over at dkanalytics.com. And I want to start, Dan, with what's going on with the Fed. As you know, and everybody out there knows, that what has happened over the course of the past few weeks has been unprecedented in world history. I mean, there's been more money dumped into the system than I think than ever before. I mean, there's been a couple of people that have recently compared it to the spending of World War II, the entirety of World War II, which was around $6 trillion, and come to find out that's what we've just pumped into the system. How do you see this impacting going forward the economy? Do you see hyperinflation? Do you see any type of inflation? What do you see this doing other than making the bankers rich?
Well, that's a good starting point. I call it, as you know, cronyism. It's either the Wall Street or the K Street type. They get refueled. The moral hazard, if they fail to behave reasonably, take reasonable risks, it's offloaded either onto the U.S. taxpayer, TARP, or to the Fed, or both. I think we're just seeing an additional version of that on steroids. I've published quite a few videos, some posts on our response to this coronavirus pandemic threat being possibly worse than the disease itself. In other words, our cure is worse than the threat of the virus. I think, without sounding like a conspiracy theory advocate, I think there are a lot of people in powerful positions, in essence, shutting down our world, from our economy to our freedom to our liberties, that have a vested interest in essence, empowering those that are aligned with big government and bureaucrats, and that this is all being sold as a way to shield us and minimize the downside of having even more infections and deaths, which are laudable goals, but frankly, I don't think we're going about it in a constructive, holistic, or fair manner. If 22 million Americans have lost their jobs, and I say that as if it was, I just roll it off my tongue, but that is just mind-bending. It's a devastation. And I know myself, and I'm sure everybody knows, how many small businesses are facing a shutdown. They cannot survive with no top line and costs that continue for any period of time. So I, in essence, think that this is a very destructive recipe, quote unquote. And the implications of this, as is always the case, when you create a lot of money, but at the same time, you shrink your supply. We've got supply chain destruction. We've got demand destruction, but we have a hell of a lot more money. What we see is a galloping increase in the M2, M1, they're in double digits, yet we've got economic activity falling off the face of the earth. So that, by definition, spells inflation. If we add the stagnation that we're creating, if not a Great Depression, unless we reverse course very quickly, and even then it'll be tough, then I think we are facing potentially, or not, if not likely, the stagflation of the 1970s on steroids.
Do you think that UBI, or universal basic income, do you think that that's any type of answer for the situation? I mean, Spain has just unleashed full-on universal basic income, unlimited, and they didn't give any kind of end date of when they were going to stop that. Just read that this morning, and before we got on, it was just like, oh my goodness. Sounds like an experiment to test to see how it works, or to see if it's going to work or something. You know, they tried it in Stockton, California, I think it was, or Sacramento, somewhere in California, last year or the year before. And what are your thoughts on that? I mean, do you think that they're getting ready to, this week they're going to hand out 80 million $1,200 checks, is what Mnuchin said a few days ago. Realistic impact, or just spitting in the wind?
Well, I think in a way you've already answered your own question, or already know the answer to your question. If I can complete the sentence in so many words, if you create money but shut down the economy, that doesn't end well. And if the incentive to not work is greater than the incentive to work, if businesses get forced to carry forward employment levels with the 350 billion that's already gone, that they otherwise would not accept. In other words, they would thin the ranks and then be able to recover and still have a business, which would then reopen once people aren't as scared as they currently are of this virus. And the fears of this are legitimate. But my point is, if you give people purchasing power, first of all, you're doing it out of an empty pocket. The federal government is broke. The only way you can do this is to print it. And at the same time, you're not encouraging the very production of goods and services that should go hand in hand with money creation. So you're in essence back in the USSR. You're back in totalitarian regimes where everybody might have health insurance, but there are no doctors, there's no nurses, there's no supplies. So in essence, I think this is very destructive. It also goes against human nature. People want to be productive. They want to be engaged. And if you take that away and have everybody focus on getting it back in line to get something, and nobody can produce, or the incentive to produce is even lower than it was before, then nothing good can come of that for the majority of people, be it economically speaking or in terms of freedom and the responsibility that goes along with it.
Do you think that MMT, modern monetary theory, isn't that really what we are seeing unleashed right now, where you have a balance of of debt that rolls off that is balanced out by credit that comes on. Right now we have an unbelievable amount of credit or fiat currency notes in the system, but those will be balanced out by the amount of debt that's about to be unleashed as this whole thing unfolds. I mean, or what are your thoughts on that aspect of it? I mean, as far as what we're seeing, I mean, it seems like we are currently lab rats, and that there's a global monetary experiment that has been unleashed. Everybody knew that the system was collapsing. They knew it last year. If you follow John Titus's work over at Best Evidence, he actually said not the video that he released today, but the one he released about a week or so ago, he explained that the Federal Reserve already knew that there was going to be 32 million or so people unemployed by Q2 of this year of 2020. Q2 of 2020 is here.
Yeah. Yeah.
So it seems like that this was just in preparation for that. And it seems like that they have just kind of pushed the MMT idea to the fore. Or am I just completely crazy over here? I mean, that's what it looks like anyway. They knew that the system was collapsing. They knew it was collapsing in September when they started the repo madness and started just flooding the system with unheard of amounts of currency, this fiat currency nonsense, and that didn't work. So they've taken it to the next level, right? Isn't that
Right.
where we're at?
Well, maybe a couple thoughts. Whatever they call it, whether it's now called MMT, whether it's called QE, whether it's called money printing, whether it's called currency debasement, the fact of the matter is when the monetary base expands at a rate that is far above that of real GDP growth, you're creating what's known as monetary inflation. And you
Right.
can call that whatever you want, but it's still the same thing. It's like, they talk about all the tools of the Fed. They're butchers. They don't have tools. They either print money or they raise or lower, the Fed funds rate. So I don't know that's no laparoscopic genius surgeon that is performing miraculous operation. That's very blunt, and the tools remain very blunt. In terms of them knowing what was going on, well, I'd say this, Rory, if you run a policy over time, I call it statism, you can call it socialism, you can call it cronyism, redistributionism, they all are antithetical to free market capitalism, the most freedom and the best results for the most people and the best productivity. If you shut down property right protections, belabor them with regulations in the US that cost almost $2 trillion, have litigation insanity run wild that's about 3 times the level per dollar of GDP as in Europe, then I call this collectively a toxic public policy stew, an anti-freedom, anti-free market policy that is going to run you into troubled waters. So obviously, if you sustain this, and every time the system breaks down, you reward those that have bet risks, have bet irresponsibly, have leveraged their balance sheets instead of investing in organic growth, have bought back stock, that you have this privileged class, the 1%ers, I'm talking Wall Street, K Street, the people that, the 2 million strong in the bureaucracy, and obviously our representatives that always come in saying that they're going to sustain or get back to the Constitution, but they end up being bought off or threatened or blackmailed. We always, and I think the rub here is the fact that we have a toxic policy stew where we have control by the few over the many, and we don't have sound property right protections, whether you have to pay off the regulators, whether your dollars are inflated away. And as such, this is almost a foregone conclusion that such a system, call it loosely back in the USSR, or at least where we're going, is not going to work. And what is the solution to a system not working? Where you can run ruinous deficits, where companies have access to funds that would have cost much more had the Fed not been in there buying the bonds. Why you run towards a situation that is patently unsustainable, economically, financially, politically. And then what is the solution? Well, it's like giving an alcoholic another drink. I think that's in essence what's going on. And the people that control the levers of power, you remember Alan Greenspan, and he used to put out articles for Ayn Rand, and how he talked about real money and that the only guarantor of purchasing power was gold, and that anybody that is in central bank kind of power is in essence wants to replace gold. And this is what's going on. And the mess we're in, which has been spiked by this tragedy called the coronavirus, is now getting us into hot water even faster, but we were already set up for this before this tragedy. And right. I think this is, in a way, look at the bureaucrats shutting everybody down. I don't see them out of work. I don't see them not having gold-plated pension plans. What right do they have to do this to everybody? And what kind of balance is there in a world where a tragic 30 to 35,000 Americans die, which isn't all too different, as I sent you a link from an immunologist out of California. What I'm trying to say is, yes, life is a risky business. We have to make the best risk-return trade-offs, and not to belittle any of the people that have lost their lives or are struggling. But we don't shut down the entire economy if people have other illnesses that are life-threatening. And what kind of fairness is there if, as a result of our efforts to shield the people, 22 million people, or 12% of labor force, is unemployed? How can we then provide or have an economy that has the people manning it, the value creation, to even afford to sustain a good healthcare system for all people, not just those hit by this terrible virus?
We're already starting to see massive pushback, not massive yet, but we're starting to see people rise up. Published a couple of articles yesterday about what's going on here in Nashville. I mean, there are people that are standing up, and to be perfectly honest, Dan, I was really surprised at seeing that happen here so quickly. You know, we've seen what's going on in Minnesota and Michigan, which in Michigan I completely understand. With that lunatic that's up there, we're probably going to start seeing more and more of that, and larger and larger and more widespread. I think that what we're going to see. And you mentioned gold a couple of times. As you are well aware, I'm a big gold advocate. Love gold, love silver. Think that they're both a key part of what we should be moving towards at this point. I mean, if we were in fact using constitutional money and currency at this point, do you think that we would be in a much different situation? Do you think that we would be in this situation at all at this point? Or how do you see, what role do you see gold and silver playing, either going forward, or how do you see that happening?
That's a great question. I think gold and silver were made the functional money of the states of America by the founders and framers for a good reason. That you can't pay people off, that you can't live beyond your means. These are all what happens. This is the progeny of having fiat money. And I mentioned our toxic policies too a few minutes ago. In other words, we couldn't sustain the kind of spending beyond government receipts. We couldn't have this artificially low cost of capital that has caused all these misallocations and drooping productivity if we had price discovery, if we had money that expanded roughly in line with sustainable real GDP growth, which with lots of bumps, silver and gold, you cannot extract them out of the ground at more than 1 or 2% per annum. And that happens to roughly be the sustainable, in a good sense, real GDP growth rate. Take 1% population growth, 1% productivity, and you get very close. And when you remove this discipline, and Jefferson warned about this, the bankers were chasing Jefferson, but he said, central bankers are more dangerous than standing armies.
Yes.
And Machiavelli before him and the Prince talked about the fact that he'd rather have guns, but that was before they had such widespread central bankers able to create fake money out of thin air, in this case electronically. So we're at a much higher level. So I think it comes down to a household, right? You cannot forever live above your means. You can't do it as a family. You can't do it as a country, or let's say as a county or as a state or as a business, much less a country. And we have been able to sustain this unsustainable thanks to the printing press and what this has led to. So I think we would be in a very different world, and we wouldn't have the extreme concentration of wealth, and we wouldn't have the extreme concentration of power. And all the people that in Washington, D.C. have done things an average American, like that guy in the submarine that took a picture, got jailed, then Mrs. Hillary Rodham Clinton can do things which Comey drew up a list for 30 minutes of what would be indictable charges, but she didn't really mean it. So what we do is we breed recklessness, both in terms of morality, in terms of politics, and in terms of finances. And this is unfortunately what happens over time. We've gone away from the Constitution, very much including separation of powers, limited, clearly enumerated government. The founders didn't envision a fourth estate called the bureaucracy, right? And they knew why they didn't want to print money, because they know what happened as a result. We saw it also in the Revolutionary War, and Jackson, as you know, did away with I think the second central bank. If we want a shorter answer, just look back at the extreme wealth and freedom of this country when we didn't have the Fed, before we had it. That was the age in which America outproduced everybody on the planet, achieved the highest standard of living, and had the most freedom. We also didn't have we didn't have a federal income tax. We didn't have a Federal Reserve. We had senators elected by state legislatures. So go figure. I mean, the proof is in the pudding.
Right, and I've pointed to that time frame, which was like the early 1800s up to the late 1800s. That's the most prosperous time in human history. Period. I mean,
it just reflects, excuse me, Rory, it reflects human nature. I mean, take a look at China, right? And take a look when Nixon went over and the great opening and all that. The Chinese were literally starving because the harvests were determined by communists, not by the free market. And people didn't have an incentive to produce, they had an incentive to get in line, and therefore not enough was produced in the agricultural sector or any other sector. It's really just human nature at the end of the day. And let's say a policy that also is very values-based. All of the founders and framers of this country, from George Washington on down, had more or less a strong belief system underpinned by the Christian faith in this case. But whether it's Christian or something else, they had morals and ethics. You cannot sustain a republic, as Benjamin Franklin said, if the people aren't ethical, moral, informed, and enlightened about what's going on. What do we have instead? We have, 100 years of progressivism. I call it regressivism, which strangely the Republicans actually got started up. So we have indoctrination over education. We have bureaucratic diktats over the free market, and we have funny money, and we got lawsuits up the wazoo. I mean, what's amazing, Rory, is how well America has been able to absorb all this and still keep on going. So in effect, you could say what's amazing isn't that this thing is now finally coming unglued, but that it stayed together for as long as it did.
It's incredible. And,
right?
and I think that I agree completely. I mean, it should have gone away a long time ago. And it seems like every time that we think that they've reached the end of the line. I mean, most people, I would think that there was a lot of people that were in the position that you and I are in, and a lot of people that are listening to this that were 1968, 1969, 1970, that were looking at it going, surely to goodness, we're coming to the end of this nonsense.
Yes.
Surely to goodness it's going to stop. And what happens? They change the rules. They change all the rules.
Yep.
All in one felt swoop, and the game continues. And then they did the same thing in
True.
As we keep going, as time progresses. Nobody had ever heard of quantitative easing. Nobody ever dreamed that. Nobody had ever thought to themselves, well, I'll bet, Dan, I'll bet what's going to happen is that the Federal Reserve is going to just print up, I don't know, 25, 30 trillion fiat currency notes and start doling them out to all their buddies. Nobody ever thought of that, but they sure did. They sure thought of it. And then now that we're running out, now that Band-Aid is now come off and the laceration has been exposed once again, they're doing it now. They've already pumped between 6 and 9 trillion into the system since September, and it's not doing anything. James Anderson over at SD Bullion, he calculated that it was 29 trillion is what they did in 2008, 2009. So we're already, 30% into that, and we just got started. It's like, come on.
Exactly.
So where does gold go from here? I mean, if it reached, a nominal 1900 off of that, and then it was, all of the rules at the COMEX changed at that point, and they were able to beat it back down. I don't think they're going to be able to do that this time. And the reason I say that is because at that time, mints were fully flush, refineries were open, mines were going full tilt, the shelves were stocked in the retail world.
Yes.
We're already seeing, I was looking at silver. Let me see if I can pull it up here. Just a second. Because I was looking at, there it is. There's JM Bullion. That's a 2020 Silver Eagle. Look at that credit card price, $27.40. That's a far cry from what they're telling us over at the COMEX,
right?
Which is currently $15.36. So I don't think that they're going to be able to do. I don't think that it's going to work this time in that regard. Or am I wrong?
Well, I don't think you'll be surprised by my answer. I don't think you're wrong at all. What you in essence said was they can keep kicking a can down the road, printing money, buying people off, rescuing Wall Street, K Street, in essence shafting most of the Main Street makers in America in the process at various levels, but that's an old story. And what is to say that they can't do it over and over and over? In other words, never run out of road or tarmac. Well,
right.
When America entered the stagflationary 70s, America was still a net creditor nation. Debt to GDP, public sector debt to GDP was about 30%, not 107%. You had a lot of families that didn't require dual income households. The father worked typically. I know I grew up in a GE town, Schenectady, New York. And when the teachers used to ask whose dad works at GE, 90% of the people raised their hand. And then we had Neutron Jack, but that's another story for another day. What I'm trying to say is there's only so much tarmac. And this whole thing, as you know, is built on confidence. And confidence can be very fragile. And if it's lost, it doesn't tend to get one back very easily. And what I'm in essence saying is I think people will start to lose confidence in fiat money. And that has huge implications, also inflationary implications. Because as you know, we've had a global paradigm of lowest possible inventory levels, just-in-time inventory. People kept saying, I'm not going to buy today, I'm going to buy tomorrow because it's going to be, I don't know, 5% cheaper or what have you. If people start to realize, also thanks to the supply side shutdown that we have, and corporations say, you know what, I can't put my product on for sale if there's even demand for it, the other big question, right? If I don't get that critical component from China or from the Philippines or from Indonesia or from Germany. So I think we have a huge change in corporate and also individuals' tendency to want to take that money and run for the inventory, for the merchandise, for the parts that are necessary for them to be able to complete their transaction or make their buy, or have what, you know, from toilet paper onwards. And I think this whole thing is going to juice the money multiplier, which has already been happening, and is resulting in all of a sudden M1 and M2 expanding at stout double digits in the mid-teens, if memory serves. Well, if this goes on, then this is going to build on itself, because as people switch from permanently expecting lower prices and corporations start to inventory up like they did under Trump's trade war, which has a positive side effect now, but isn't long lasting, then you're going to want to take that money and instead of putting it into the stock market, which they can no longer do as they're asking for handouts, you want to put it back into inventory and make sure you have a little too much rather than a little too little, because if you don't have certain critical components with worldwide sourcing, you can't sell anything, right? So I think this whole thing is coming together. It's going to continue to pressure the money multiplier upward. And that combined with a monetary base, the Fed's balance sheets, the globe's balance sheet, all the central banks are playing the same game. We're just waiting. We're just asking for a stagflationary disaster. Might we get a temporary disinflation or deflation in certain areas? Of course. But that's just the point. The central banks, by hook or crook, are fighting to devalue money around the world. And history shows that if they are detached from the disciplines of gold and to a small extent silver, then they're going to get what they want. And we see it in Venezuela. We see it in Zimbabwe. Why should it be any different here?
It won't be. It won't be, because fiat currency is fiat currency. You can put whatever picture on it that you want, but at the end of the day, it's still the same thing.
Right. I mean,
it came from nothing. Right. It's just made up.
There is no work, no value added behind it. So what it does is if there's too much of anything, the value of that goes down. And
right.
That's expressed in rising prices. But you know, you mentioned gold, silver. I think our biggest risk out of this, and it's a continuation of a long-running saga where the statists, in essence, want to take out what's left of the Constitution or constitutional fidelity. A real risk is much bigger than just our ability economically to do well. It's, will we still have the Bill of Rights, right? Are we going into a totalitarian era? And this coronavirus is just like the Patriot Act and some other things. There's people, you know, Benjamin Franklin said, those that worry too much about safety and are ready to give up liberty will have neither. And I think, unfortunately, that's the trajectory. And hopefully enough people will rise up and stand up against this and we can dial it back. But it's not looking too good. If you look at, in terms of portfolio allocations, at about $220 trillion globally under, say, managed accounts. This is a Credit Suisse, my former employer's number. And you take the tiny smidgen, maybe 0.5% or so, that's allocated to gold, usually paper gold, right? Because they can't store physical, they don't earn any money management fee. So there's a large disincentive for money managers. They don't want to hold physical gold because they don't earn anything on it, right? But if they have to buy enough paper gold and nobody can deliver, well, then it's going to end up with the same result. And if we both know well that mined gold globally is 140, 150 billion a year, silver is about 14 billion a year. We've got these globally managed accounts, mainly bonds, 2/3, stock about a 1/3, and a little bit of private equity and whatnot. But if they just try to move the allocation needle by 1% on 220 trillion, hell, that's 2.2 trillion. Now compare that to the gold and silver coming out of the ground. And the only way that they can gain a higher allocation is through a much higher equilibrium price.
Right.
And as confidence crumbles, people don't just want to grab for guns and have toilet paper, but more and more people are starting to distrust what's going on. You feel it at the gut level. You cannot, for instance, pay people not to work and then hand them out unemployment benefits and at the same time close down for business. I mean, any kindergartner knows that that's not a sustainable recipe, other than for a stagflationary disaster. And by the way, this can lead to an unraveling of the civil society, thanks to need and legitimate need. I mean, all these mom and pops and people that are going out of business through this governmental diktat to stay in place, shut it down. I mean, these people are going to be desperate, and rightly so. So this does not bode well for anything other than, if we continue with this, some kind of anarchy. And anarchy is usually answered to by a police state, which we're already seeing up and rising in very threatening terms. So we're going in a very difficult, not such pleasant direction. Maybe we can go do a 180 quickly enough, but it's not looking all that good, you know?
No, which is what I was saying just a moment ago when I was talking about these they're small in numbers, but growing in locations. Those numbers are going to start escalating fairly quickly, in my opinion. And I think that, and I wanted to ask you, Dan, before it gets away from me. You'd mentioned 220 trillion in under management globally.
Yep.
And about 1/2 of 1%, which I've heard that number for years, is allocated to gold and silver investment, which we'll just use that number. And then you said that it was, if there was a 1% movement,
right,
that it would blow the system apart. I've long argued that we don't need a 1% movement. We need like a 0.2. If it goes from 0.5% to 0.7%, then all of a sudden you've got, is it 400? Would that be 440 billion? 440 billion.
Right.
So all of a sudden everything starts shifting around. So it doesn't take this gargantuan movement. And a 1% movement is a gargantuan movement. It takes a very small movement. Even just think if there was, half of that, one tenth. If it goes from 0.5 to 0.6, all of a sudden we're looking at something that's unsustainable, and for something that doesn't exist.
Well, there is no supply, Rory. That's the bottom line. And you are correct. I try to be conservative. Look, if they go from 0.5% global assets under management, about 2/3 bonds, about 1/3 stocks, and a residual private equity and what have you. But you could well say half of that. You are utterly
Right.
and entirely correct, because more and more of gold is in very firm hands
Right.
in Eastern nations, from Istanbul through to the Pacific. Okay.
I was thinking more firm hands right here in Nashville.
Well, I agree with you here in Bonita Springs, Florida, right? But my bigger point is it doesn't take much. And if we hark back to the traditional levels, look, I have fluency in Swiss German and in English. I'm a dual national. For whether that's good or bad, I don't know. But I can tell you that the Swiss private banking world over decades suggested that people, of various investors, not just mom and pops, not just family offices, but that people, investors, if you will, put 5 to 10% of their portfolio wealth, their liquid wealth, into gold and silver, right? So if we're at 0.5% today, and in the late 60s, prior to the Bretton Woods termination of the gold dollar backing, or the gold backing of the dollar, globally, people, managed accounts used to have up to 5% of the total globally invested assets, professionally managed, mainly bonds, secondarily stocks, reserved to gold. That is, the allocation percentage was 5%. And we're down at 0.5%. Now, whether we go to 1, which would be mind-bending because the supply isn't there, the only way you can get allocation percentage up is by increasing the price, the equilibrium price, supply and demand, right?
Yep.
But I think we're arguing over details. We're not arguing at all. We're trying to make a point, I think is a better way of saying it. It's not going to take much. That's all I want to say.
Yeah, it's not going to take much because I don't think that we're going to see a big rush of people bringing their gold and silver back to market unless we see far higher prices, in my opinion. I mean, we'll see a little bit. I mean, there'll be people that will need to,
Yes.
liquidate and so forth, but to see some real volume come back to the market,
Yes.
that we're looking at some pretty hefty numbers. And
Well,
I said not too long ago that double from where we're at right now.
yeah. Well, that is the higher equilibrium price, right?
Right.
That's what we're talking about. Whether it's 2 times higher, 3 times higher,
Whatever it is.
Silver to gold ratio go back more in the direction of 15 to 1 instead of 107 to 1. These are all, complementary thoughts. Or if you look at the big picture, and again, what do people, a lot of people also make the argument, by the way, that gold is not something you want to have in a deflation. Well, if it's a debt-induced deflation in a fiat money system, they're dead wrong. I mean, Roosevelt proved that. And my point is, because gold anticipates exactly what's going to happen in a fiat money system, in other words, a counterfeit currency situation, specifically that inevitably the powers that be will crank up the printing presses, electronic printing presses today, but it's the same concept.
Same idea.
To try to get out of a debt-induced deflation, which is our big problem that they created in the first place.
Right.
They are the parents, and this is their progeny, right? That's what it is. So gold actually does spectacularly well, not in periods of productivity-led deflation. That's wealth of nation stuff. People always pan deflation. Heck, what do you think a growth company is? Intel, Microsoft, the Asian chip manufacturers. Anytime you can grow a market by lowering the price, you entice in more people. If your unit cost structure can also fall so that you can take a good chunk of profits along with you with falling average selling prices, that's a growth industry. That's deflation. That's the positive deflation. We have the negative deflation because we've killed productivity. and as such have had to add debt.
which is no good.
No, you
It's,
got to pay the piper.
and
You
that,
either
and
go broke or you inflate away the value of the currency. At the end of the day, you're still going to get proverbially screwed as a
yeah,
creditor, right?
and you're going to have more debt, and you're going to have more problems. So, well, Dan, this has been a great conversation and a great introduction for me to you and to your work and your knowledge base, and I absolutely love it, and I really am excited about being introduced to you in this conversation. It's been really a great conversation. I look forward to us doing it again. I would encourage everybody to go over to dkanalytics.com. Check out Dan's work over there. I do republish a lot of his work. I'm just getting introduced to his YouTube channel, so you'll see more of that on thedailycoin.org. And you can, if you would, come over and see what I got going on, which is a lot of aggregate news along with a lot of original work as well. So, Dan, like I said, this has been a great conversation, a great introduction, and I look forward to many more in the future.
Rory, thank you very much for the opportunity. I would be less than honest if I didn't tell you that I also thoroughly enjoyed our chat.
It's been really great. And I look forward to speaking with you in the not too distant future.
Thank you very much, Rory. Likewise.